Hey everybody, Economic Ninja here. I hope you're doing great. I'm going to go over the jobs report right now. And honestly, my camera started before I was ready, so it's this automatic thing I've got set up on it. I just started to move erratically, and all of a sudden the camera fires up. We're going to talk about the jobs report, and I'm going to tell you something. We're going to go over the numbers, and I'm going to explain something that nobody's going to tell you, and what I believe is coming. And we're going to talk about the Federal Reserve interest rate hike. I honestly would not be surprised if it's 1%. And I know I've said before that I'd be shocked if they get this over 1.25%, because it's going to take the whole system down. But I believe that they are blinded by their data right now. So here we go. Let's talk about the jobs report. This is out of CNBC. I'll link it below. It says, here's where the jobs for June 2022 are in one chart. And it's, first off, this was a blowout report, okay? They were expecting a certain amount, just absolutely blew Wall Street's expectations. So they're trying to mold this data over, because right now the world is expecting, and I am telling you right now, we are in my non-professional advice, a recession, right? I don't need to look into the rears, into the, for lack of better terms, into the past to tell you that we're in a recession right now. Here's some key points. Healthcare and social assistance saw the biggest jump. And this is for the jobs report, okay? So again, think about this. Jobs and healthcare and social assistance saw the biggest jump, followed by professional and business services. The leisure and hospitality sector saw another strong month, adding more than 60,000 jobs. That makes sense because places are reopening, right? And they're adding services. All right, so in one chart, they start showing that healthcare and social services led 77,000 additional jobs. Professional and business services were second, 74,000. Then it starts going down. Leisure and hospitality, 67,000. Then you start seeing transportation, warehousing, manufacturing, all this. So everybody's adding, right? Utilities and financial activities saw the least amount. And it's interesting because financial activities, I would actually put that into like mortgage industry would be, real estate industry would be in that, in my mind. And we're seeing mass layoffs there. So it's understandable that it was the lowest, right? Now it says right here, the U.S. job market was stronger than expected in June, with payrolls growing by 372,000 and several sectors vying for the leadership role. The point is that payrolls came in super strong, and now Wall Street is starting to look at this, and the headlines already started to tell you, hey, some of these big boys, these players that were saying we're not going to see, like the Federal Reserve governors, we're not going to see a recession until 2023, are right. It would make sense because, hey, all these jobs are added, which means people are making money. This is where I believe the pros are going to be wrong. That money that they're expecting, because I said, hey, all these people got jobs. You know, you're going to see the White House. Hey, by the way, if you ever shopped at a warehouse, if you know what the chain of warehouse stores are, put it in the description below. That's a blast from the past. The White House will be touting this as a killer, where we've never been in a stronger economy, blah, 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 right? Not only say that because they're full of hot air. The reality is all of that money you're going to find out in the next 90 days that people are earning from all these new jobs that were created, supposedly, and they weren't created. They came back from destruction, right, of a shutdown in the economy in 2020. What you're going to find is all the people making that money, it's going to a couple of things. Much higher inflated food costs. It's going to much higher inflated borrowing costs for their credit cards, because people are using credit cards to buy food now. Credit card debt is exploding, right? Well, interest rates are going up as well. They're having to, people that are buying homes or refinancing their homes right now at much higher mortgage rates, that's where that money is going, right? You're also seeing auto insurance going up. I mean, literally everything is going up, right? So whereas Wall Street is going to try and spin this and tell you things are good, and you might have a little bit of a rally in the markets, right? I'd be shocked if you saw an additional 1,000 points get nailed to the Dow from now until when it starts to turn down again, right? They're going to tell you they're going to spin this as positive, but I want to make sure people understand that, yeah, it's great that people are going to work, right? The problem is that money is getting pushed back into the system in the form of debt payments, just higher costs across the board. Higher fuel costs, things like that. It's funny, I saw a comment once, just recently on one of my videos, like, hey, how's that high cost of fuel thing working out for you? All I see is prices going down. And I think of how foolish some people are, where they just like, my prices are going down every day. Like what, for like the last 5 days? Just give it some time. This is a long-term cycle. We haven't even seen Russia turn off the spigot to Germany yet. And when that happens, get ready. Get ready to see what happens with the oil prices worldwide. Just a little bit of a threat, just a little bit of a problem in the markets, and the futures markets will be bid up so fast your head will spin. And then you'll see it in your gas pump. And yeah, the gas prices in your area might be going down right now for a little bit of time, but it's because of a little bit of a tax holiday. Just a mere pittance, nothing. This is to me, akin to the Marie Antoinette moment of when she said, let them eat cake. Because really, the leaders of this world are just sprinkling these little things. Oh, do you want a little bit of loan forgiveness for your loans, student loans? Oh, here you go. Here you go, just a little bit. Looking at the big picture is what we need to do and not focus on the hyperbole. If that's the right term. Let me know if it is or not when you hear this. Or the minutia. I don't even know if we could put those two together. When the markets are coming up with all these either excuses or let's spin this the right way. Jobs report was great. See, the economy's doing good. It doesn't matter that all these people got jobs. Those jobs are needed to go. And how many of those, I'm just going to throw this out there, are second jobs? You know, we've seen so many problems in America with stupid laws that were passed that tie the hands of employers to keeping you at 29 hours or less, and they're calling that full time now. Why? Because if they pay you more hours or work you more hours in the week, they are forced to pay certain benefits for you, right? And so as cost-cutting measures, they just hire more employees and give them less hours per week. So most Americans are underemployed right now. See what I'm saying? So how many of those jobs that are coming out of these great numbers on Wall Street are second jobs? Just that people can make ends meet. That money is going to go directly into food and into their gas tank and into their hire mortgage. So I don't want people getting swayed by what Wall Street's trying to spin, okay? This is a magician we're talking about. Wall Street are a bunch of hocus pocus magicians out there going, look it. And they're taking your money over here. They're stealing from you. That's why we talk about inflation hedges like gold and silver. And it's funny, some people go, well, look, it's down this year. And I go, well, since 2020, gold's up 15% or something like that, maybe 13%. Whereas it has well outperformed the Dow Jones by a factor of, I think, 2 now since January of 2020. Do me a favor, guys. Take a look at it. Put the numbers down below in the comment section. I'm just going from my memory. So be warned that these little numbers that come out, I want you to understand that in 2006 to 2008, there were these blowout numbers too that happened throughout those 2 years. See, there's nothing wrong here. And you got Ben Bernanke coming out like a total puppet going, see, there's nothing wrong here. Nothing can happen. Trust me, I'm a student of the Great Depression. He's literally I don't even want to, I can't say what I really think on this thing because it's a bad word, but it's like that tool leading the Federal Reserve at the time, telling you how he's an expert in the Great Depression. And the housing market cannot collapse. I do not agree with your thesis. I'm going to use big words and sell a book later that hopefully does not sell. That's the only financial advice I'll give you. Don't waste the money on that dude's book. Why would you buy a book from a dude that was just wrong? And now he's poking the finger at the current administration of the Federal Reserve like Jerome Powell saying, oh, you screwed up. You tool. Man, that's solid work, Bernat. My point being is this. Don't get caught up in these reports. Look at the big picture. Sure, people got jobs. Where are they spending their money? And in that, you're going to find deflation. Deflation is already rearing its ugly head. It's already, the deflation bubble is popping in real estate. Deflation needle is popping other markets like travel and leisure. It's popped the subscription services. What's next? I don't want you guys to be a victim of this. I want you to thrive from it. So start getting ready, buy some food, Don't get into crazy debt. Pay off what debt you can and keep that credit score solid, because when this thing comes crashing down, I'm going to say, all right, guys, it's time. We're going to take the mountain. All right, with that being said, I thank you so much for watching. The Economic Ninja is out.